Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Infineon lowers its outlook for the first quarter of 2025 amid weak car chip demand. We will break the latest earnings from the UK pharma giant AstraZeneca. Risk off in Asia as shares slump in Hong Kong and Shanghai. This as investors weigh reports of China hawks set to join the next US administration. And Trump's team is taking shape with Florida Senator Marco Rubio expected to be named as Secretary of State. We will bring you the latest.
In the meantime, a quick check on these markets here. From the futures picture, it's not exactly a positive one this morning. Down almost 1% on Eurostocks 50 futures. The FTSE 100 underperforming right on its heels. Euro-dollar seeing some weakness as well. Remember, we are at a 106 handle on that currency pair. But as Anna said, a lot of focus on the United States. You're seeing Bitcoin rally almost to about 90,000 per Bitcoin per dollar. Also one eye on China. It's not just the U.S. there. They're slashing their tax rates for home buying. They're also having the weakest fix in the yuan, 725 on that currency pair. The countdown to the opening trade starts right now.
Tuesday the 12th, good morning. Still all about Trump. That's all you need to know, really, in so many ways. The Trump trade is on, and you're beginning to see a reaction, as Kriti and Anna were both saying, to the formation of the Trump cabinet, the Trump administration. Assets are reacting to this in various different ways. We'll come back to that in just a moment. Before we get to all of that, we need to actually talk about fundamentals. There are earnings. There are kind of the more mechanical processes still unfolding in front of us. Vodafone out. AstraZeneca looks like it's beaten.
Yes, absolutely. AstraZeneca looking really strong then, Guy. Good morning. Astra upgrading its full-year guidance, full-year core EPS view to high teens percentage growth. That's the upgrade, the positivity coming through from AstraZeneca. So whilst we wait for a Trump administration, there are still these earnings stories to deal with. We're looking for any detail around the obesity pipeline, pills certainly in focus when it comes to AstraZeneca, and this China probe. China runs through various stories today, but there's a probe being conducted into some of their executives and former executives. What did they know about how immunotherapy drugs that are not OK for China got into Hong Kong and then into China? So that's one of the earnings stories we'll keep an eye on today.
We'll keep an eye on Vodafone. That's also coming out with numbers. We need to probably recap what's happening with Infineon as well, the German chip giant, out with numbers a little bit earlier on. There's a line, I'm just reading the press release, there's a line that really stands out in the opening paragraph. Currently, there is hardly any growth momentum in our end markets except in AI. They're getting hammered by the EV story right now. What is happening with the inventory build-up? This is not the place you want to be right now if you're a chip manufacturer. However, there is a hint in there about the AI story. This is a company that is providing power chips within the AI space. They're heavily influenced by what is happening with the Blackwell story around NVIDIA. And that's the kind of the bright news going forward from here. But the AI story is not enough to compensate, Kriti, for what's happening with the EV space.
Sticking with some of the other German earnings, Bayer as well, has nothing to do with the AI trade at all. But it is, I think, one that's worth watching, especially when we look at how it all shakes out in terms of the DAX as well. They are lowering the earnings guidance. They're saying weak crop unit is really the one to blame there. So we'll, of course, see if that profit outlook is really punished at the opening trade.
I was just on your point about AI, Tokyo Electron boosting their full-year operating income forecast, beating estimates. There's a bullish story, and that's AI-linked.
There is still an AI theme. That's a Trump theme. We've spent most of this year talking about the AI theme. Yeah. That has now been superseded. The Trump theme, the Trump trade, is now the dominant story. We're starting to see the formation, and we're going to talk a lot more about this throughout the show, about what the Trump administration is going to look like. And I think one of the first things you can take away from what we've learned so far is that China hawks are being elevated to some of the most senior positions. And you're seeing a reaction to that within China assets today. You're seeing a downgrade in terms of what the market is expecting going forward from there. You do have a reaction from the Chinese government already. We've seen the one-year yuan fix it, the yuan fixing this morning at a one-year low. That's really interesting. Will that be the response channel? Plus, also, we're seeing more stimulus coming through.
Yeah, absolutely. There's talk of boosting demand. One particular part of the Chinese sort of apparatus talking about that, but very mindful of what Trump is going to deliver and maybe thinking we wait for some of that. On the mining stocks, we'll watch out for those at the open because we've got aluminium, copper, iron ore all down. Underwhelmed by what we've heard from China so far. then it would seem to be the case, Chrissy. And we get more data out of China. At the end of this week, we get that kind of typical deluge of industrial production, fixed asset investment, retail sales, all at the end of the week. And that'll give us a sense of just how the latest announcements on China have been going down.
Yeah, I think it's kind of interesting to see how it all shakes out in the currency picture specifically as well, simply because we are, of course, seeing all the stimulus measures, the tax cuts measures as well, that the Chinese economy is trying to really throw at it. And you were looking at a yuan at about 7.25. Again, that has to do with a lot more of the fixing. The Trump picks are fascinating, though, especially because he's really going into, from a domestic perspective, a lot of the very specific kind of Floridian folks, senators, former House representatives, all from Florida, all who, by the way, really signaled their loyalty to Trump early on. And this is significant given his first kind of time in office. He really had kind of cycled through his cabinet positions. He's trying to avoid that now. We should make a big disclaimer, though, that as we do hear about all these Trump picks, they are not confirmed yet. So they will still have to be via the Senate. But at the moment, that doesn't necessarily.
Is that going to be a problem?
Sorry?
Is that going to be a problem?
It might not be, but one of the concerns is if you do actually pick them now, will they still be the pick in 2 months' time? That's one of the concerns that you have.
One issue that you were flagging earlier is around the House, that if you keep taking people from the House to work for the White House, that maybe that complicates the business of getting policy through the House. We are still waiting, I think, correct me if I'm wrong, still waiting for the exact numbers on what the House looks like, but it does seem to be leaning Republican. Interesting counter to the fact that he's appointing all of these China hawks is that Musk has such a seat at the table, and, you know, he can say all sorts of things on all kinds of topics, but he does have a lot of business interests in China, selling a lot of Teslas in China. So we'll see how that one plays out.
I think you made a key point, though, about what happens if you start to pick the House. I decided to tap our kind of in-house expert, Derek Wallbank, who out of Singapore has been a long kind of person to cover Congress as well. He says for the House, there's the likes of Elise Stefanik, who's just been chosen to be the U.S. ambassador to the UN, for example. Basically, the seat goes vacant until there's a special election. For the Senate, they do have an immediate replacement. But again, the time varies. The takeaway here is that there isn't necessarily a gap in representation when it comes to Congress.
I want to know who's going to be the Treasury Secretary. I bet it sounds like he wants to be the Treasury Secretary. He's writing op-eds in the Wall Street Journal. He was on Kudlow yesterday on Fox talking about the fact that he's told the president that the dollar loves him.
Excellent.
I guess they do.
Maybe it does. Don't know.
Without evidence.
I thought Trump did.
The story says somewhere.
I thought Trump didn't like the dollar, but that was kind of neither here nor there. The president wasn't very keen on it. And also talking about the fact that the market is basically signaling that inflation is coming down and that all is good.
Yeah. Thinking of inflation, let me go to some wage data out of the UK. That just hitting the Bloomberg terminal. July to September, wages, excluding bonuses, rising by 4.8% year-on-year. The estimate was 4.7, so that's coming at the sort of toppy end. It's not doing anything to the pound right now. It seems maybe we know what we know, or we know what we expect when it comes to the Bank of England, this cautious pace of easing, perhaps
gradual.
Still intact. Gradual, that's the word, sorry, yes. Gradual pace of easing, and looking at all the effects of the budget on wages will be the story as we go from here, won't it, in terms of the minimum wages and what that does further up the pay scale. But that's the wages story in the UK. UK wage growth barely slows, bolstering the case for BOE caution is the headline.
What else we got coming up on the show? Let's talk about it. Nick Brooks, ICG, Head of Economic and Investment Research, is going to be joining us shortly. Eric Knutzen, Neuberger Berman, multi-asset class CIO, joining us as well. Louise Dudley, Federated Hermes Portfolio Manager, joining us around 8. Francine Lacroix is at the UBS Annual European Conference. She is going to be speaking in the next hour to Olli Rehn. He, of course, is the Bank of Finland governor and has, of course, a seat at the table at the ECB, Chrissy.
Plenty to keep an eye out for in terms of interviews across Bloomberg programming today. Let's talk about some of the other data that we're going to see in the next 24 hours. At about 10 a.m. UK time, the German ZEW survey, I think it's ZEW if I'm being European there.
You can go with Z.
I'm going to try to do Z.
We speak both languages.
Comes out at 10 a.m. UK time. At 11 a.m. UK time, though, you do have the US NFIB Small Business Optimism. I believe that's 11 a.m. US time, actually, when that comes out. So we're going to keep a very close eye on as well. And then, of course, the Senior Loan Officer Opinion Survey comes out. Plus, plenty of Fed speak. There's data points, but does the Fed speak really align with some of the data? Waller and Barkin are both going to be hitting, of course, the wire.
So we'll watch for that, for the Fed commentary. Interested in the ZEW, though. I mean, it is seen as flat, so maybe, you know, not a huge expectation around this particular data point, maybe. But everything around Germany has a lot of expectation built in right now, doesn't it? We're waiting for the timing on the election, really just any words from Scholz that matter about the timing. We've had suggestions that he could be prepared to bring it forward, the election, this is, to February, but that's still not
I think he's speaking tomorrow to parliamentarians. I think he's speaking to the Bundestag tomorrow. I think probably at that point the pressure will be enormous to maybe go a little earlier than he had originally anticipated. And all the CEOs we're talking to, all the CFOs we're talking to, who we talked to yesterday, Continental, talking about the idea that let's just get on with it, please. Can we just? We need to move forward in Germany.
Yeah. So that's the problem. When you announce a sort of major date in the diary that adds event risk.
Yeah.
Assets don't know what to do in the meantime or need you to get through that particular event.
Yeah, there's an element here that I think a lot of people kind of overlook as well, which is the taxation. You brought this up yesterday as well. Germany has the highest corporate tax rate
30%
in the world. Yeah, I think it's like 29%, something massive. At the same time that the U.S. is actually potentially pulling down their tax rate, not to mention for consumers as well. That puts Germany in a really bad spot, not to mention Italy, which is the second highest tax rate. I didn't know taxes could be so interesting, but suddenly they really, really are.
I would have thought taxes would be right up your street, actually. I would have thought...
I do have a small obsession with them, but I know for everyone else, taxes aren't that interesting.
OK. What else?
It sounded like someone told you that, Chrissy.
Just the voice in my head.
Just the voice in your head. OK, what else we need to know this morning? Let's get on with it. It's reported the EU is set to change its spending policies, potentially redirecting tens of billions of euros to defence and security. According to the Financial Times, the policy shift will apply to around a third of the EU's common budget. Member states will be told they have more flexibility to allocate cohesion funds to support their defence industries and related projects. Getting ready for Donald Trump. Bloomberg has learnt that the UK plans to begin issuing digital gilts within 2 years. The Chancellor, Rachel Reeves, is expected to announce a digital issuance trial in her Mansion House speech to the City of London. I think that's Thursday night next door. The hope is that it will make gilt trading faster and cheaper as the government embarks on a £297 billion borrowing spree, the second largest total on record. And Lufthansa is reportedly close to finalising a deal to take over Italy's ITA Airways, the old Alitalia. We're told the German flag carrier and the Italian government have resolved the main points of contention. The agreement hit a snag last week when Lufthansa asked for a discount on the €325 million price tag for a 41% stake that it is buying in this business. The idea basically is that you buy it buys more and more and more and more. But this again speaks to the idea that Europe is this mess of differing objectives and regulations and needs consolidation and needs a cross-border story to develop in a meaningful way. Now, in some ways, the aviation sector has already done this. You look at the big kind of groups, Air France, Lufthansa and IAG, so that's already in process. But there's still lots of work still to do.
Yes.
The fact that this is happening, I think, has got to be taken as a positive. Is it a signal for other industries? I'm not sure.
I wonder, though, because if you can get a government such as we have in Italy to agree to this kind of thing, that's quite interesting, isn't it? A populist government being able to put aside that nationalistic impulse and let a flag carrier go into this kind of arrangement with another airline, a German airline. I think that is quite interesting. And it has been the promise for this sector for so long that we would have this kind of consolidation. So it's quite fascinating to see that is actually playing out.
Does cross-border consolidation in this sector lead to cross-border consolidation in other sectors?
I don't know, but
if you can put aside your flag carrier, I mean, that's quite a big deal, isn't it? These are the airlines that, used to, at least, have your flag on their back.
Lots of countries have already done this. So Austria, Switzerland, etc., have all kind of effectively gone down this road.
But isn't this a money issue as well? Giorgia Meloni needs to offload this. She needs the funds, right? So I almost wonder if how much of that kind of desperation for funds actually helps with some of that cross-border consolidation, except you're not seeing that in Germany, right?
No. But the bigger... If you take a step back and you think about kind of where we are in the new Trump world that we live in, Europe needs to figure out lots of things it can do to make itself more efficient. This is maybe an example of one of them. It's been incredibly hard to get, though, to where we are now in this process. And you've still got TAP, you've still got all kinds of other airlines that still need consolidating as well. Yeah.
Let me just go back to where we started this part of the programme, which was on AstraZeneca, because there's another really interesting line coming through here, that Astra is investing $3.5 billion in R&D and manufacturing in the United States. And the CEO goes as far as saying that this reflects the attractiveness of the business environment, together with the quality of talent and all the rest. But, a vote of confidence perhaps in the existing policy arrangements that are available in the United States, or a statement in the future. I mean, either of those, you could read either of those into this.
Astra has developed a very strong footprint in China already. Is this a reflection maybe that was an error?
Right. I mean, and obviously they're constantly commenting on what they think of the business environment in the UK as well.
We should also mention that there is a bill in Congress right now that could potentially punish companies operating in the United States that have manufacturing going into China as well. And that's something we've talked to the CFO of AstraZeneca about on this program. They say that they're kind of working around it. This feels to suggest, this headline almost suggests the opposite.
And just to make it clear, they already have a lot of employees, 17,800 employees in the United States already, so certainly a big presence.
But you really want, if you're a large company, you want hedges right now, don't you? You need a China hedge, you need a US hedge. Think about a company like Airbus.
You maybe need regionalisation. That's what the Philips CEO told me. And it's similar, you know, operating in a pharma landscape. You want to supply Asia from Asia, the US from the Americas, and Europe from... Anyway, we need to move on. So we'll park that conversation. Coming up on the programme, there'll be a heavy climate theme runs through a lot of the programming this week. COP29 leaders agree on a global carbon market mechanism. We're in Baku with an exceptional lineup of guests throughout the day, so stay with us here on Bloomberg TV. Plus, also from COP, we hear from the Exxon Mobil CEO, who gives his outlook on the energy sector and the impact of a Trump presidency. So that's essential listening and viewing. Up next, economist Nouriel Roubini believes bond vigilantes may resurface. We will discuss his call. Fascinating one to put to our guests today. And if you have other questions that you'd like to get into the guest conversations that we're having, then please do get in touch. IB plus BBTV Go this Tuesday morning, live from London. This is Bloomberg.
He cares about market discipline, and if bond yields go higher and the stock market correct, that's a bond vigilante in the market saying your policies are unsustainable. And if he chooses the right economic advisors, they're going to warn him against policies that eventually have such a market impact and may lead to policies that are more moderate.
Roubini's been far too cheerful recently. There's been hardly any doom or gloom, but it feels like we're kind of warming up to some again. That, of course, Mr. Roubini, the CEO of Roubini Macro Associates, speaking exclusively with Bloomberg yesterday, Professor, I should probably say. Treasury yields inching a little higher, reopening following yesterday's holiday. Let's get more from Valerie Teitel.
Guy, we are seeing yields tick higher as they reopen from the holiday yesterday. But again, this is not a bond market that is going to deter a further equity rally. Yes, we've seen 2-year yields climb. Yes, we've seen 30-year yields climb, but it has not deterred this risk-on mood. Let's flip on and just talk about how these Trump trades have fared in the last week since the election. S&P futures up 5 straight sessions in a row. Russell 2000 futures, that's the U.S. small caps, up over 7% as we want to be exposed to that domestically driven U.S. growth. The Bloomberg Dollar Index also up nearly 2% higher. We heard from Kathy Woods yesterday, Guy, saying that the deregulation that could happen under the Trump administration could ignite a powerful boom in the U.S. economy akin to the Reagan Revolution. That is leading us to really pile in to the equity market. If you take a look at ETF flows into U.S. equities, they have been really eye-catching, nearly 4 times average ETF flows on a daily basis into the equity market since the election. I want to talk about one more asset, and that is Bitcoin. It is not waiting for any further clarity from the Trump administration. We are hoping for deregulation in the cryptocurrency sphere. We are just shy of that $90,000 mark, up nearly 30% now since that Trump win became clear.
Yep. Certainly crypto, Bitcoin loves the Trump trade. The dollar, you could argue, also does as well, Valerie. And it's been fascinating to see just the strength there. Apparently, Scott Bessent, who could be the next Treasury Secretary, hedge fund manager, obviously reportedly in line for that top job, telling the president the dollar loves him. He also penned a piece in the Wall Street Journal yesterday, an op-ed, and this is the quote from it. Markets are signalling expectations of higher growth, lower volatility and inflation, and a revitalised economy for all Americans. We're joined by Nicholas Brooks, Head of Economic and Investment Research at Intermediate Capital Group, ICG. Morning.
Morning.
Does that sound about right to you?
Well, it sounds a little bit like marketing to me. I think that, clearly markets are signaling higher growth ahead.
Yep.
And
inflationary growth ahead?
But I would argue that, and looking at break-evens and other measures, that inflation expectations are also rising. And also the point on volatility, we'll, have to see how that pans out. But looking at what's going on in markets right now, and in particular looking at what's going on with Bitcoin, I would argue that the volatility point is perhaps not quite correct.
What does that actually do in practice in terms of, let's say, Scott Bissett or someone else is brought to that position, in terms of the actual economic impact? How quickly do we see it? And two, what actual policy changes could be made?
No, it's a great point. I think what markets are trying to understand now, and I think so far they've given Trump and his new administration the benefit of the doubt, but they're trying to figure out to what degree is Trump really going to follow through on all of his tax cut promises and spending increase promises. So I think at this point markets are taking the view that they'll be careful about this, having seen, for example, what happened here in the UK with Liz Truss and what happened when we saw the gilt market blow up for that short period of time. However, we don't know this. If the new Treasury Secretary, whoever that is, comes through and says we're pushing forward hard on all of those tax cuts that were promised during the campaign, and markets believe that the Congress will pass them, and given what's going on in Congress today, that looks as if, certainly in the near term, they may be able to pass quite a few things, then I think bond vigilantes do come out. Okay. And I do think we potentially see a spike higher in U.S. bond yields. So it's not my base case, but I think it's a risk.
Okay, so a lot depends on who he appoints, who he has around him. So Nouriel Roubini was making that point, that he thinks Trump will care about, to some degree, about fiscal responsibility, especially if he's got the right advisors telling him he needs to care about that. So that's what you're going to be watching for in these Trump appointments, is it, Nicholas?
Absolutely. That's totally critical. I think from a market point of view, what we care about most is who is the Treasury Secretary. Obviously, the other positions are going to matter tremendously as well, but the Treasury Secretary is key. And I think if there is a perception of fiscal responsibility, we will see the bond market react quite violently. And, just to give some statistics, which I know you all will know, I mean, we're looking at a fiscal deficit in the U.S. of over 7% of GDP now, even when the economy is booming. We're looking at debt to GDP in the U.S., if at a gross level, at 120% of GDP. I mean, actually, what's going on in Europe, Europe looks, quite conservative compared to the kind of numbers that we're seeing in the U.S. The focus, of course, has tended to be on, what Europe needs to do.
For you.
Absolutely.
You guys have got the dollar.
Yeah.
So absolutely.
And it's
That's
our
what
problem.
it is.
And it's our problem.
Yeah.
How seriously does he need to take, and I'm looking at the people he's putting into Homeland, etc., how seriously does the president and his team take deportations for it to make a meaningful impact in terms of the economy? The labour force, in some ways, has been one of the areas that has allowed significant outperformance of the US economy. If that is curtailed, how quickly do we see an impact? How big an impact could potentially... I know this is really difficult to judge.
Yeah, no, it's a very good question, and it is hard to judge. I mean, one of the reasons inflation hasn't been higher than it is now, given the amount of growth that we've been seeing in the U.S. economy, is that we have seen a pretty strong rise in immigration over the past years. If we were to see that curtailed substantially, that would certainly be inflationary. Now, the real question, as you highlighted, is how quickly does this happen? I don't know, but my instinct is that it will take time, and that when we're looking at over the next year the risk to inflation and bond yields, that will be a second priority. As we move into the second, third, fourth year of his presidency, that might start to become more of an issue.
All right. Nicholas Brooks, we're going to leave the conversation there. We thank you so much. Head of Economic and Investment Research over at Intermediate Capital Group. There's plenty going on here. Futures are actually trading a little bit lower. Your Stoxx 50 down about 1%, and the sell-off does continue. A lot of the selling concentrated in the French index as well. We're going to keep an eye on that, not to mention the bond market dynamics and some of the dynamics, by the way, that Nick was just talking about there. Specifically, we're talking about more of the deficit, more of the currency picture, seeing 106.27 on euro dollar, 128 handle on cable. The pain continues in Europe, whichever asset class you look over in the States, bonds, stock, dollar, Bitcoin, and you are seeing a rally on your hands. Stick with us, plenty more after the break. This is Bloomberg.
Bastian, welcome back. Tuesday morning, a little bit of a ruling coming out of the Dutch legal system. A judge there ruling that Shell, the oil company, has a duty to reduce its emissions. But here's the kicker. It's not possible to say by how much Shell must cut its emissions.
Yeah, this is complicated stuff, isn't it? This is an appeal by Shell against a civil ruling that was in 2021, where it was ordered to cut its emissions by 45% by 2030 from a baseline of 2019 levels. So I'm not sure you can join the dots between what was ruled in 2021 and what we've heard so far. So maybe there's still more to hear from the Dutch court, because it doesn't sound... Well, we don't know yet. Have they upheld? Are they dismissing the case? Or are they going to amend what was decided in 2021? And this all could still be appealed again up to the Supreme Court.
The judges has a duty to reduce its emissions. Yeah, great, ticking the box there. But the key thing, as you're mentioning, is the detail. This is about numbers, and it's about where you start the baseline from and where the numbers take you from there. And
we still don't know. So we're waiting to see if any further lines come out of this, or maybe this is a court saying, you know, this is for somebody else to decide. We'll see if we get there. This, of course, coming during COP meetings, very timely, isn't it? That over in Baku, thank you. We have the COP delegates meeting, and I think we were just looking at some live pictures of that family photo taking place. But that's going to be a tough family conversations.
In the era of Donald Trump, certainly even more tough. Let's talk about that era of Donald Trump, the US president-elect. The cabinet's starting to take shape. Markets are continuing very much to react to all of this. Kriti, walk us through the latest names that we know.
A lot going on in terms of how you actually are viewing some of this. Remember, none of these have been confirmed. None of these have been even really accepted from a lot of the press as well. These are just the ones that are likely to be suspected. I'm going to start here from the biggest one that we know, and that is Marco Rubio here talking potentially about being the Secretary of State. What you need to know about him is the idea that he has been a Floridian senator. He's been tough on China. He's been sanctioned by Beijing. This is a really big deal. He was one of the early movers against TikTok, against Huawei, in terms of the way they operate within the United States, really earning that sanctioning from Beijing as well. He's also very kind of pro-Latin America. That friend-shoring argument is a big one here when it comes to Marco Rubio. He's also talked about and actually supported legislation within Congress about how a U.S. presidency could withdraw from NATO, making it a little bit harder. So although largely aligned with Donald Trump on his geopolitics, not all the way. Which brings us to our next candidate here, Michael Waltz, potentially becoming the National Security Advisor. At least those are the reports. He, again, is a House of Representative for Florida. He served in Afghanistan. He's a Green Beret, Special Armed Forces, with in-depth knowledge on military operations, and again, sharing a lot of that anti-China rhetoric and view for President Trump. Which brings us then to a similar theme we're seeing with Representative Elise Stefanik. The idea that she is now was a representative for the state of New York in the House of Representatives. She is also very tough on China, one of the early supporters in Congress of Donald Trump, potentially representing the United States in the UN. How does this show up in the markets? This is important when it comes to the currency picture, because you're kind of seeing a little bit when it comes around the world. Remember, I talked about Latin America, of course, the effect in Ukraine, the effect in China as well. You are seeing that across the board in some of these currency pairs. Is it the trade war, the tariffs under potentially Latin America that could swing the currencies? That's where you're seeing the weakness in the peso? Or is it the other way around, the support from some of these picks, especially Marco Rubio? Which brings us to a crucial pick that Europe really needs to keep an eye on, and that is Lee Zeldin. This idea that he could potentially be the next head of the EPA. Here's why this matters. He could turn around some of the Biden administration's current policies around natural gas exports to Europe from the United States. Pipelines, infrastructure investment, and this is why it matters. It's simply because the exports to Europe from the United States have increased substantially, not just in light of the war in Ukraine, but of course that what you've seen across the board. We'll pull up the chart for you in just a moment, but basically it is an increase over and over again for about the last decade. This is why the infrastructure matters. If Europe is trying to pull back on its dependence on Russia, pull back its dependence on the Middle East, maybe the United States could come to the rescue, and this is the man to do the job.
Pretty nice. We'll get back to some of those energy themes in just a moment. Let's bring in our next guest into the conversation, Eric Knutzen, multi-asset co-CIO at Neuberger Berman. Eric, so much to talk to you about today as we're watching this Trump administration taking place, looking at who is being mentioned and who's in the mix. There's lots to talk about when it comes to bond markets and whether the bond vigilantes are back, for example. But China hawks, and whether we're going to see a lot of China hawks appointed. We're just seeing the foreign ministry in China now saying no comment when asked about officials that Trump is picking. What is your early reading of what matters in these picks from a sort of when we're looking at the China relationship with the United States?
Yeah, so, Trump is playing, he's focused on a couple things. Obviously, tariffs is one, but he knows that really inflation and immigration is what got him elected. And so as much as he is going to pursue tariffs or use tariffs as a tool to change the terms of trades and change the relationships between the U.S. and other countries, he is also very focused on inflation. And this is, we got from conversations with Scott Bessent and other, folks who are likely to be in the Trump administration. They don't want to impose policies. They are not planning to impose policies that will significantly increase inflation unless they can find ways to offset that. And on that, they're focused very much on, for example, keeping energy costs down or driving energy costs lower to offset any inflationary impacts of tariffs, which probably wouldn't happen until the second half of next year at the earliest.
Okay, so if you're thinking you're not going to worry too much about inflation, you point to maybe late implementation of tariffs, maybe tariffs not being as extreme as was touted on the campaign trail. But there are still other reasons to be concerned about inflation, perhaps, in the United States. Tax cuts, maybe. Sure.
That when you look at kind of asymmetry of risks, inflation on the upside could be one of the most important concerns, and that's why we still have some exposure to commodities. Gold is potentially a hedge there in terms of our portfolios. But you look at the full implementation of tariffs. If Trump does 10% across the board, 60% on China, our expectation is that's at most 25 basis points of additional impact on inflation. We have pretty good visibility. We have high confidence that inflation goes to 2.7 to 2.8 by the first half of next year on core and 2.5% by next year. A little less confidence on that. But again, it's lower from here. It's not at the Fed target, but we don't think the Fed's that concerned about getting to 2 as long as it's going lower from here. And in the meantime, the Trump administration has a lot of tools to use to try and manage that.
Yeah, I mean, Guy, that's a very interesting conversation, isn't it, about where the Fed's target really is.
Yep.
Many long theses to be written on that one, I'm sure.
Yeah, indeed.
Yeah, what is happening in the labour market? Has the Fed been rescued over the last few years by the fact that immigration has actually been relatively high, and therefore that's kept the labour cost story relatively low? It's really interesting. If you look at the oil price at the moment and inflation expectations in the market, they're going in very different directions, which tells you that the market is looking for the inflationary impulse to maybe be picking up from here. You talked a moment ago about inflation and immigration.
Yes.
Can you have both coming down at the same time?
They are certainly working in opposite directions, as are tariffs, but there are other elements, there are other tools in the toolbox, including productivity growth, and so we're going to watch this very, very closely. Again, it's going to take some time before the immigration story unfolds. The number of new arrivals has already dropped dramatically, and so it'll take some time before there are any further actions beyond that, deportations, et cetera. It's going to be challenged in court. We're less concerned about that in the next, say, again, 6 to 12 months.
To Anna's point about kind of what the Fed does next and kind of how it's thinking about it, does it just what is the logical thing for the Fed to do right now? Is it just to wait, see? Can it act at this point? Should it be acting at this point? You've pointed to things that are going to happen, but we don't know when.
Right. So we think that the terminal rate probably ought to be 3.75 to 4, which is about where the market has gotten to right now.
Where does that leave Treasuries? That
leaves our fair value on the 10-year Treasuries around 4.25. So not as steep a yield curve as we expected, say, 6 months ago or 12 months ago. And that means Treasury yields aren't that far off fair value right now. We were ready to sell Treasuries at 4.5. We were short Treasuries from 370 on up. Now we see the best value in Treasuries at the 5 to 7 year point of the curve. We don't want to be at the long end. We think we just get volatility without a lot of compensation there. So we think the Fed cuts in December and then may very well pause. And even then, it's only 1 or 2 more cuts after that point.
How seriously are you taking this Bitcoin rally? Is it something that materially changes your investment thesis around Bitcoin?
So we are not anti-Bitcoin. We see Bitcoin as having a potential purpose in portfolios for those clients who want to engage on that discussion. We wrote a piece right before the election saying that if Trump won, we should fade some of the major elements of the Trump basket. Perhaps we didn't expect the Trump victory to be as clear-cut as this. We would say Bitcoin is one of those assets to be fading.
Is it a threat to other assets, though, like Nvidia, for example, things that retail investors got very excited about?
So I think the most important thing to focus on with this Bitcoin rally right now is that this liquidity is sloshing around the global system in ways that will continue to drive markets. You saw it with the moves we saw in early August at with VIX going to 65 and the Nikkei selling off 10-15% on almost no news. You saw the 23% rise in the Chinese equity market on 3 days. This isn't normal market fundamentals driving markets. This is liquidity sloshing from one area of the market to another. It's going to continue to have an impact on the margin. And so, both positive and negative. So this is an example of something we'd fade. We do want to have exposure to equities. We're overweight the broadening theme in equity markets in the United States, at least through the end of the year. And things get more complicated as we move into 25.
You said liquidity is sloshing from one area to the other. Where is it sloshing from exactly? Especially at a time when Trump is both pro-Bitcoin and pro-dollar. How does that work?
Well, it's sloshing from a lot of other currencies. It's sloshing from, other bond markets and whatnot. It's sloshing from cash. There's a lot of excess, cash sitting out there. So, we think the dollar can continue to rally. We think that a lot of these trends will be in place at least through the end of the year. But then when you move into 2025, you have to start reevaluating the playbook. The obvious trades, which are playing out, some of which have fully played out. We've had a nice run in financials. We've trimmed that back. It's important to remember, in 2017, the first full year of the Trump administration, the dollar actually sold off after having rallied late in 16. Why? Because the Chinese stimulated aggressively, in part. And we could see, elements of that in 2025. The Chinese right now have engaged in a certain amount of stimulus, mostly focused on risk management, truncating the left tail in their economy. They're holding fire to pursue additional stimulus. I was just there a few weeks ago. Folks on the ground there, the stimulus they appreciated was the cash for cars, old cars and old appliances, cash for clunkers. More of that and those types of stimulus efforts can have an impact.
Okay, and we'll see if we get evidence of the impact of that in that data that comes out on Friday. We're getting a question from a viewer about US financials, and I think you hinted at this. Is this another part of the Trump trade that perhaps you also fade?
We have faded that. That said, that specific element, that said, we think there is a more durable broadening out of market leadership in the U.S. market. And frankly, in 25, that probably begins to extend more globally. And so we do want to participate in that broadening out away from the Magnificent Seven towards, down the cap spectrum in terms of mid cap, small cap, the other 493 stocks in the S&P 500, and with a bias towards more cyclical and value-oriented stocks.
Yet the environment, in theory, should favour growth stocks.
It all depends on what happens in terms of interest rates. If as Scott Besson has said, they are able to deliver non-inflationary or disinflationary growth, then that should lead to that broadening out of markets. If you do get rising rates and significant increase in inflation, that's going to hurt the smaller company stocks and the more, interest rates.
Which one of those two things, just to kind of finish up, which of those two scenarios is more likely?
So through the end of the year, we're happy to ride this broadening out. We're going to continue to evaluate the situation as we go into 2025. Right now, at that point, it's probably good to be closer to home and get a read on these things. But we think that this broadening out could be durable into 2025.
Is 6% viable on the 10-year?
6%.
6%. Well, I asked this because there is a consensus now. I've seen forecasts for as high as 5.5% in 2025. Is it a stretch to say 6%?
Your reaction suggested it's not your base case.
Yeah, that's not our base case. So we'll as I said, our fair value on the 10-year is 4.25. We would start buying duration at 4.5 to 4.75. We think if it gets, we don't think it gets much above 5% unless some of these other significant relationships have changed dramatically.
Okay. Thank you so much, Eric. Thank you really for bringing us your thoughts this morning. Eric Knutzen, multi-asset co-CIO at Neuberger Berman. The Shell case has just been developing. We touched on this around 15 minutes ago or so, but let's just get an update. So a Dutch court has rejected forcing Shell to reduce its Scope 3 emissions. And so this is being seen as a win for Shell, winning its appeal case in the latest Dutch ruling over emissions. So the court had three options here. It could amend the ruling, it could uphold it, it could dismiss it. It seems as if they have said that they are not keeping, they're siding with Shell essentially on this appeal that Shell had launched against the 2021 order that it cut emissions. So not being upheld.
Another tough day in Baku, basically.
Yes, absolutely. So this, really does. It's not the mood music in the background that if you are a delegate at COP29, you wanted, I suppose.
Yeah, the bigger picture probably being the Trump story.
Yeah.
And we have live pictures, apparently,
Yes,
coming from Gov't.
I'm sure they'll come. Well, we'll have to see if this is something that the market even trades on when we look at it. Of course, as we were talking about those live pictures in Baku, there they are, looking hard at work in Azerbaijan. Of course,
we're talking about Shell. No, maybe not.
Maybe not. We'll see. Of course, we'll keep an eye on how Shell trades at the market open. Coming up on the program, we're also going to keep an eye on the chip-making sector. German chipmaker Infineon seeing revenue declining next year in a sign of lower demand from car makers. We're going to bring you some of our interview with the CFO next. Stick with us. This is Bloomberg.
Welcome back to the programme. 7:48 here in London. Rachel Evans joins us, Bloomberg's managing editor for FX and rates coverage for the US and EMEA. And, wow, it's been a busy 48 minutes already, Rachel. We've covered a lot and there's still plenty more to cover. Global implications of the strong dollar. We hit a one-year high on the dollar. You say that this perhaps raises the risk of FX intervention. What are you watching for?
Yeah, I mean, I think, like, you know, whenever we've seen a strong dollar historically, that has huge ripple effects for the rest of the world. So I think something to watch kind of in coming weeks and months is really going to be the sort of jawboning and commentary we get out of central banks sort of globally around the world as they start to digest what kind of a sort of stronger dollar, not just in the short term, but potentially in the long term over the next 4 years, could mean for their economies and could mean for their currencies. We've already seen some unease, particularly in Asia, around, you know, sort of a Trump presidency and what that means for the currency. But I think it's going to be very interesting to see what that kind of means for China in particular. I was reading a story this morning just about kind of a Bloomberg survey of economists, and more than half were saying that they expect to see China look to weaken the yuan as a way to kind of counteract those tariffs. And some were saying as by as much as 10%, which would be huge. So I think you could potentially see a lot of rhetoric around kind of sort of how people are using their currency to sort of combat some of the sort of economic policy that comes out of the US. I think that's going to be something to watch as we sort of get beyond sort of the immediate aftermath of some of these big currency moves.
This is the Infineon press conference, the press note this morning as they put out numbers. And the outlook for fiscal 2025, based on an assumed exchange rate of 110. Is that a little out of date?
For the euro?
Yeah.
Yeah, I think we're kind of starting to move towards conversations about parity. That seems to be the big conversation in markets. I mean, the euro is kind of being buffeted on multiple different fronts at the moment, obviously. I mean, they were already looking like the economy there was going to be weaker than potentially in the US or the UK, so more interest rate cuts required, so the euro taking a hit from that. Now we have the prospect of tariffs making some of that weakness even worse, and then you've got the political issues that are going on.
That's almost a Chinese devaluation we're talking about here. That's a big kind of 10%. That's a 7, 8, 9% move in terms of the decline potentially we're going to see in the euro.
Absolutely, yeah. I mean, for the euro at the moment, we're around 106.
Yeah, so but from where we've come from.
Yeah, 100%. Yeah, no, I really, well, not 100%, but maybe 10%. But yeah, we're really seeing kind of like people talking about a weaker euro for the longer term. And I think kind of the political headwinds that you're also seeing in Europe are being underpriced at the moment. I mean, all of this kind of sort of turmoil in Germany around the government, you know, it's obviously had a big impact on bonds in the last week. You know, we've really seen them kind of sort of reacting to the prospect of more borrowing by Germany. But there's also this underpriced risk of potential euro area fragmentation. You've got France quite weak politically, Germany quite weak politically. That potentially brings back the whole conversation about the European enterprise and whether it can kind of continue surviving.
We covered a lot there. We didn't even ask you whether Bitcoin's a commodity or currency. Rachel Evans, Bloomberg's managing editor for FX and rates coverage for both sides of the Atlantic. We thank you so much. Let's go from the macro to the micro. Get our stocks to watch with Joe Easton. Joe.
Morning, Critty. So Infineon is giving a bit of a downbeat forecast from the chip-making space today. This was the stock already down around 20% this year, given some weakness in the auto parts of the chip-making sector. The CFO spoke to Bloomberg about some of the caution among the customers earlier today.
A much more pronounced seasonality in terms of inventory management by major customers. So they are managing their inventories very, very strictly towards their calendar and fiscal year end.
So that was the Infineon CFO speaking to Bloomberg earlier about that weakness in some of their order book at the moment. But we're also looking at AstraZeneca here in the UK as well. This one is looking a bit more upbeat. They're raising their guidance on a number of sales forecasts, mostly driven by oncology, so the big cancer drugs doing well at the company. But the important thing with this one is we've seen a big drop in that stock over the past couple of weeks due to a probe around the way some drugs are being moved between China and Hong Kong. AstraZeneca says it is fully cooperating with that, but we can see it has come down a lot. It was trading at around £13 and now is below £10. Then we've got this pie chart here showing how AstraZeneca's results today could actually have an outweighted effect on the FTSE 100. It is the second biggest stock on the FTSE. Only Shell is the bigger stock on the FTSE index. Then we've also got another one in the pharma space from Bayer, but this actually is more about their chemicals business today. The company warning that they have seen an acceleration of some weakness in the agricultural chemical space, according to some of their numbers. So that's coming from the German company today, potentially could weigh on the outlook for that one. We can see that this stock hasn't recovered really at all from a massive profit warning we saw almost exactly a year ago related to weakness in agriculture and also some of their drugs as well. Not getting any brighter in terms of the outlook on that one. Finally, in the ratings changes, Morgan Stanley has a big note on autos, getting more positive on that one. They upgrade BMW. GlaxoSmithKline, Astra's big rival, that one's cut at Jefferies. And Vinci, the airport servicing company, that's an outperform over at RBC this morning.
Thank you so much, Joe Easton, with an update on some of those stocks in focus. We'll add to the list Volvo Cars. Geely strongly denying that it's considering selling any stake in Volvo Cars. There had been some press reports regionally that had suggested that they might. Really will watch the FTSE at the open then. If Astra and Shell are very much in focus, then they could be big movers.
BAE Systems as well could be another company you want to watch out for this morning. You've got to look at what the defence commentary looks like coming out of the EU, plus they updated guidance this morning. Looks pretty positive. So we'll see that factored into the FTSE as well this morning, plus the pound. This is Bloomberg. Tuesday morning, a couple of minutes to go until the start of European trading. The opening trade 2 minutes away. Let's talk about what Friday looked like. Not Friday, yesterday looked like. Not much actual signal from this chart. So you've got, this is the European close, that's the US close. Actually, there's not much arbitrage between the two. The biggest influence right now is the Trump trade, and that is having a global impact. And you can see that from China to Europe, obviously the United States and what's happening with Bitcoin, all of that big factor. But I can't see an obvious steer, Critty, in terms of where the futures are going. But they look very red this morning. It's interesting to see that that's not actually coming from the States.
It's not. Weakness in Europe, not just in the equity market, but in the currency market as well. But there is a dynamic here that I really want to point the attention to. You are seeing an almost 1% move down in Euro Stoxx 50 futures. You're not seeing that matched by the FTSE 100, actually only down by 0.3%. And Anna, I really bring this to everyone's attention because you're seeing the same thing in the currency market. Euro dollar under weakness, cable not as much.
Yeah, we had some data out from the labour market earlier on. Didn't move cable very much, but reminded us of the Bank of England's choices from here and the pace of change expected or not. Let's go to some individual stocks that could be on the move. Talking of the London market, AstraZeneca could be in focus. So yes, we've got an upgrade to guidance, and that could be the dominant story there. That could put some upward pressure, but Bloomberg intelligence analysts flagging the withdrawal of one of their filings for use in first-line lung cancer and saying that this is disappointing and this could drive further cuts to long-term sales estimates. So we'll watch for impact there. We're also looking at Bayer. They have lowered their earnings guidance on weak crop unit performance, and Infineon. They see sales declining as car chip demand struggles, a story guide that we know very well.
Absolutely. Look forward to maybe an AI story there, though. Right, here we go. Time for the opening trade. Time to take a look at exactly what Europe thinks of the equity market this morning. And generally, we're anticipating a negative picture to emerge. FTSE 100 first out of the gate. There you go. Some red on the screen. Then we get the IBEX. We're seeing some losses there as well. We're anticipating actually some fairly significant downside moves today. The IBEX is already delivering on that. To Critty's point, we're not necessarily seeing that in the FTSE 100 this morning. I'm interested to see how some of these drug stocks trade. BAE Systems could be interesting. Shell could be a story story. We've talked about that. Stock 600 down by 0.4%. I think it could take a while to get the DAX open this morning. I think there's some quite interesting stories there that could take a while to factor into our thinking. The CAC is already down by 1%. Critty, we'll wait for the DAX. What else is going on?
Well, the culprit for some of the red is actually your heavyweights here. No surprise. LVMH is taking a really big hit this morning, down about 2%, right alongside Novo Nordisk. And this is important. In futures trading, a lot of the French index, the French futures index, was seeing the most underperforms across Europe. It looks like that's reflected, at least in the early trades that we are getting, Anna. But it is that story of heavyweights. And tech, of course, also on the back foot here. When you look at your three worst, your biggest weights on the Stock 600, it's Novo, LVMH, and SAP.
That is interesting. Interesting that Novo Nordisk is so active today. We're going to talk about the pharma sector with Sam Fazeli a little bit later this hour because, of course, we've got those numbers out of AstraZeneca. And in terms of the top line, there wasn't a great deal about the opportunities in obesity, but that is something that everyone's watching AstraZeneca for with the pill side of things as opposed to the injections. But AstraZeneca's share price is up by 1.8% then, so the market is responding to that upgrade to guidance. We'll see if we get any reflection on the other areas of disappointment that Bloomberg Intelligence were pointing to. But there we do see a bit of green. But broadly, the market is sort of opposite of yesterday. Yesterday we saw quite a bit of green. Today we just see red on the sectors.
Stock 600, there are 36 stocks that are higher. That probably tells you that there's 486 stocks that are lower.
And just flagging Basic Resources as one of the worst performers. We did start this programme with reference to China, and that's always a good thing to do on a day where we get some disappointing either commentary coming out of China or the stimulus measures fall in a disappointing way in China, which seems to be what we are constantly digesting right now. And so we saw weakness in the China trade, and that seems to be filtering through into some of the commodities this morning.
Are we at peak US, peak pessimism for Europe and China? Because at the moment, everybody's kind of waiting for the Chinese to deliver. That's not happening. Maybe they wait for the Trump trade to kick in, Critty. And maybe we're at peak pessimism when it comes to Europe as well. We don't necessarily see a massive pickup from here, but is this as bad as it gets? And is this peak US? Because it just feels like, and it's felt like this for a while, we're on different planets right now, the US versus the rest of the world.
But then I think the question is also, yes, that might be the dynamic, but then do you have a little bit of FOMO not being exposed to the US right now as kind of that hedge?
Or Bitcoin.
Or that is a longer conversation. Let's bring in an expert who might actually have the answers to the many questions we're posing. Louise Dudley joins us around the table, Global Equities Portfolio Manager over at Federated Hermes. Luis, walk us through this story. Are we at peak pessimism, as Guy says? Does it pay at the moment to be away or non-exposed to the U.S.?
So we wouldn't say we're definitely at peak US. I think the US for next year and beyond is actually looking very strong. And even within Europe, we're looking at companies that have that US exposure. The growth is just that much better. The only thing perhaps that maybe the European names have got for it is that as the growth outlook weakens, that we might see more cuts coming in, and that obviously does do something to kind of offset
ECB cuts.
Yes, exactly, yeah.
Does the ECB cut have that much of an effect on the equity market? And I ask this in the context of tariffs, structural changes in German politics, French politics, no matter what comes out of Brussels, et cetera. Are cuts still the tailwind of Europe?
So I think it's, I guess, the relative bright spark out there. I think everything else, as you say, tariffs, negative. A lot of the other kind of factors, in terms of the ongoing geopolitical influences, the high energy prices that Europe is not able to kind of overcome, are going to continue to overhang for European companies.
Are you comfortable buying into US markets as expensive as they are?
Yes, we are. And, that's because there is that improved growth trajectory that's there, and we can see that, and we know that's still yet to come in with some of the expectation around reduced taxes. We are going to see some revisions. We've obviously just gone through earnings season, and so now we are going to see the market led by a lot of these geopolitical macro influences, but going into next year we'll go back to those fundamentals, and maybe some of those numbers will get that uptick, and that's going to come through strongly.
Is it inflationary growth? Because that's critical. If it's inflationary growth, then we maybe get the Treasury market reacting. Would Treasuries I'm talking about the 10-year here at 5% be a problem for the equity market? At what point is there a constraint on this growth story?
Yeah, I think, what we've seen from last earnings season is that we did see strong beats on revenues and earnings, but actually earnings were beating by more. And I think that's going to continue to be the focus going forward, that people will be focused on that bottom line. So then kind of less concerned about those inflationary numbers coming in at revenue level. But we are definitely watching what the Trump trade is going to cause for next year in terms of US markets, in terms of inflation, and then obviously how that impacts the cut cycle as we see it going forward.
Louise, we have the COP29 events taking place right now. You say in your notes that ESG is arguably more important than ever, and I can see where that comes from when you talk about the various climate events that we've witnessed of late. But looking at various measures of how much America is focused, at least on ESG, it doesn't look like perhaps it did a couple of years ago. If you look at the mentions by CEOs of the words ESG on earnings calls, they're just not there to the same degree they were a couple of years ago. If you look at search activity in America, it's held up elsewhere, actually, non-US. Searches for ESG have held up, but not in the States. It seems as if this even before Trump, this is a theme that is kind of fading. Is that your experience?
So, I mean, lots of people are talking about green hushing. So, certainly US corporates less interested in talking to the market about what they're doing in terms of green ambitions, even kind of on the social side as well. But we are actually seeing that trajectory is continuing for corporates. So, a lot of the spending around clean energy is continuing, and some of those ambitions, and I'm sure we'll see a greater step up from the COP as well, that green energy spending is continuing to permeate the market, and some of the best opportunities we think in terms of growth are some of those names, just because of the exceptional kind of trajectory that we have through to 2030. So
you don't think the US sets the mood for this sector?
I think they do, in the sense that we're going to continue to see this dampening in terms of the overall sentiment. But I think the underlying drivers are already there. But maybe we see less of a sudden flow into ESG assets as we saw, through 2020. But maybe we don't see so much of a pullback that we saw maybe in the last year or two.
What about defense stocks?
Sorry?
What about defense stocks? How are you thinking about it? Is it as simple as...
It's like the opposite of ESG.
Yeah, well, exactly. But I'm curious how much of that is a Trump trade, how much of that is a trading update, how much of that is German politics as well. What drives defense right now?
So, absolutely, people think, within a Trump world, there is going to be more spending in terms of military. We know already that we're in a number of conflicts around the world. Those names have done well over the last couple of years. And to be honest, that is set to continue. But there's also lots of corporates who don't have direct military influence, but who are also benefiting from that spending. So the tech companies, for instance, have a lot of government spending. That is kind of indirect spend that isn't a defence company as said, but, those are names that we can still invest in from an ESG perspective.
It's really interesting, though, that you have seen... Europe is already blurring the lines. So it's starting to use cohesion funds. One of the reasons why defence stocks are trading strongly today is because Europe's basically signalling you can spend money out of the cohesion funds on defence. Europe's got to figure out a way to solve its problems. It's got a defence problem it's got to solve. Clearly, with Donald Trump coming in, that gets greater. It's got a welfare issue it's got to solve as well. It's got an immigration issue it's got to solve. How does it use the various funds? And the lines feel like they're getting blurred right now. What was ESG... Traditionally, you wouldn't think that cohesion funds would be spent on defence, but actually, in some ways, you can logically kind of consider that to be a way forward. But it does seem as if the lines are getting... And Europe is going to be right at the forefront of this. It's going to have to blur a lot of lines to get done what it needs to get done.
And arguably, we saw the boom in ESG when the lines were very blurry, and now they're being refined, I suppose, Louise. That's the direction of travel in Europe.
Yeah, and also we can look back to 2016 and what happened there, and I think, those trends actually, although there was a lot of kind of talk about the fact that it would be a very material impact, actually that wasn't the case. So I think, that is our expectation this time, that actually there will be the headline news about kind of things being more negative and additional spending, but the sense that it flows through is maybe less kind of overdone, I would say.
Louise, nice to see you. Thanks very much, Steve, for stopping by. Louise Dudley, Global Equities Portfolio Manager at Federated Hermes. Let's talk a little bit about what we're seeing in the Core 6 this morning. This is what the picture looks like. We do have quite a lot of red on the screen. It's interesting that ASML is actually popping a little bit higher this morning, but the luxury stocks are under significant pressure. Is that a China trade? Schneider's also a little bit softer. Is that a read across from Infineon? I don't know. You've also got some of the defensive names. Look at Nestle, the staples softer as well. But the one that really stands out to me is Novo Nordisk, down hard this morning, down by 2.42%. It's had a reason. There's been some more positive news recently, but this stock does seem to be quite volatile, and we don't know yet what the story is going to be. One of the areas we don't know yet in the States is what the healthcare story is going to look like, who is ultimately going to be put into some of the key roles there. Let's talk about some of the other single stocks we're watching. Joe's got all the details.
So we've got a big drop over in Germany this morning, Guy. Bayer now down close to 10%, down 9.6% at the moment. Remember, downgrading its outlook for agricultural chemicals, citing a decline in some of the farming markets that it sells into there. The actual pharmaceutical business looking OK. It is all about the chemicals business today. Bear in mind, as we said earlier, this stock was down around 40% on a one-year basis heading into this report, following a big profit warning around a year ago that it hasn't recovered once, so heading even lower for that stock today. Then one of the worst performers as well. This is in the UK for the luxury space. We got Burberry down another 5% today. Now, we did get headlines out of some press reports yesterday saying that a potential takeover by Moncler really isn't progressing, and those kind of rumours around that deal really aren't going to progress any further, according to the latest reporting on that. We have got general weakness in luxury today, given declines over in Hong Kong. Prada was down around 3%, as were the other rivals as well. Then in terms of your earnings here in the UK, couple of big ones, as we mentioned earlier. There's Astra, edging very slightly higher, only up 0.6%. Remember, down a lot over the past couple of weeks on those China probe worries. And then Vodafone, this one looking a bit weaker than I had expected. Now, a lot of the declines in some of their sales are over in Germany. That does seem to be the weak part of their business at the moment. The UK holding up OK, and Spain as well, their other big market. But it looks like Germany weighing on the stock, and that is a surprise drop for a company that tends to be pretty stable for Vodafone. Then over in software, a bit of a warning from Temenos. This is enterprise software. It was cooled down around 6% on TradeGate. Currently down only 1.5%, potentially not as bad as expected, but a weak one in the tech space for Temenos today over in software. Then finally, we've done Astra, so we've also got GSK, a pretty big call from Jefferies. They have been a longer-term buyer on GSK, but they say that the vaccine outlook isn't strong enough to keep them buying the stock, even after the Zantac litigation situation did improve. So they downgrade that one after a long time being buyers, and that stock is down at 1.7% this morning.
Joe, thank you. Joe Easton from our equities team, keeping us on the case with individual stock movers this morning. Coming up, we'll talk about the ECB and the European rates landscape. We're going to be hearing from the Finnish Central Bank Governor and ECB Governing Council member, of course, Olli Rehn. He'll be talking about the markets, the ECB's rate path from here, and plenty more. This is Bloomberg.
So the UBS European Conference kicks off today, bringing together key players from businesses, finance, politics. Bloomberg has exclusive coverage of the event, where investors will discuss everything from geopolitics to central bank policy and, of course, AI. Bloomberg's anchor, Francine Lacroix, is now standing by with a great guest.
Guy, thanks so much. We're delighted to be joined by Olli Rehn, of course, the Central Bank Governor of Finland. Thank you, Mr. Rehn, for joining us. There's a lot going on. We worry about possible tariffs against Europe from Donald Trump, but we also had some pretty good third-quarter GDP results in Europe. What does it mean for monetary policy in December? Is a 50 basis point cut still on the table?
Well, we do data dependency, but not data point dependency. In other words, we have to make an overall assessment and look at the trends in inflation, in growth, in productivity, in wage developments. For the moment, we are preparing the next broad macroeconomic projection for December, and we have in particular three things that we are looking at. First, the inflation outlook. Second, the underlying inflation neutralized from energy and food prices. And third, the strength of monetary policy transmission. What I can say is that the direction is clear, but the speed and magnitude of rate cuts will depend on incoming data and our analysis.
But, Governor, if you had to choose today, what would you do, given also the specter of tariffs from the U.S., which, frankly, we don't know the impact, we don't know when they'll come in place and how big they'll be?
Well, I think the critical things are indeed inflation and growth outlook. And if you look at inflation, disinflation is well on track in the Eurozone. At the same time, we see that the growth outlook, despite the better figures in third quarter, have weakened, even deteriorated, especially because the manufacturing sector is in difficulty. So if it is confirmed that, if it will be confirmed that disinflation indeed stays on track, and if growth outlook seems to be weakening, that strengthens the case for a rate cut in December, in my view.
50 basis points or 25? Or again, then you have the tariffs from the US. So is that automatically inflationary, or could it hurt growth into the second quarter of next year?
I think it's important we maintain freedom of action, so I don't take any exact stand on a certain number. We know both the market data for the moment, market expectations, on the basis of which we could be leaving the restrictive territory sometime in the spring-winter of next year, 25. As far as the tariffs are concerned, it's too early to tell what are the specifics of US trade policy of the incoming administration. We know that there will be tariffs in the verbal pipeline spoken of, but we don't know exactly what kind of, and of course Europe will not be caught off guard this time like last time. Europe will have to give its response, and then we will see whether there is some kind of a negotiating process. The last thing we need now, with the geopolitics in very tense situation, war in Ukraine, Russia's illegal war, Middle East burning, the last thing we need now is yet another trade war, especially between allies.
But, Governor, what do you mean by Europe will not get caught off guard? Is it a negotiation with Donald Trump if he does want to impose, or do you think Europe as a whole is just more ready to face extra tariffs?
What I mean is that the European Union has a thing called common trade policy, and the European Commission has quite strong lead on that, of course with the support of the member states. So the European Commission has prepared scenarios over different versions depending on what the policy of the United States will be, and it simply means that we cannot kind of stay on the ground and be beaten, but we have to respond and do it smart, do it wisely, and preferably both the European Union and the United States should avoid a trade and tech war especially between the two allies in the current tense geopolitical situation.
But could you see the trajectory of monetary policy changing because of these tariffs? Would there be, for example, less focus on services inflation? That's been one of the big worries of the central bank.
Service inflation is a concern that's related to wage growth, and wage growth has moderated, although it's still somewhat elevated. Concerning the timeline of the effect of US tariffs, that's going to be medium to long term, and we can only react in monetary policy to economic and developments we know and we see and we feel. And then we react on the basis of our price stability mandate, looking at how best achieve our symmetric inflation target of 2% over the medium term.
Will that be easier to achieve?
Well, in my view, geo-economic fragmentation and higher tariffs, protectionism is by definition inflationary. It would be probably more inflationary in the United States, combined with expansionary fiscal policy supported by tax breaks. But it would have a detrimental effect of the whole world economy, including Europe.
Governor, you mentioned these projections that are coming out in December. I know the market are really, waiting to see exactly what it means because they're longer-term projections towards 2027. What do you think you'll see in them?
Well, I prefer to see empirical evidence. We are currently still collecting data. The method is that the ECB economists to the top-down European forecast. The national central banks provide analytical raw material from their own countries. So it's a combination of top-down, bottom-up, and then you iron out loose ends. So it's, I think, one of the most meaningful products of the projection and forecasting process. And I'm very much going to look forward to what kind of data it will provide concerning wage growth, what kind of data concerning productivity, as well as, of course, inflation and growth.
But, Governor, do you worry about the quality of the data because you see this overhang of fragmentation so that you could see a trend that then gets disrupted by geopolitics?
We have a shortage of data in many areas, like services trade, developments in the labor market. We have done a good improvement in terms of analyzing the labor market and wage developments over the past years. But there is still a long way to go and still much to improve. So that's a continuous process. Of course, the geopolitics is currently overshadowing the European economy, and we are analyzing its effects on growth and inflation.
Governor, very quickly, will you serve another term?
That depends on those who will take the decisions. That's basically the Parliamentary Council of the Bank of Finland, and then ultimately the President of the Republic. I'm very motivated to continue as Governor of the Bank of Finland.
Governor, thank you so much for your time today. That was, of course, Olli Rehn, the Central Bank Governor of Finland. And I will send it back to you in the studio in London and also welcome all of our radio listeners. We'll have plenty more from the UBS conference throughout the day.
Francine, thank you very much. Bloomberg's Francine Lacroix there with the ECB Governing Council member, Olli Rehn. Really interesting guy talking there. I mean, the first time asked about tariffs, saying they need to maintain freedom of action, but then acknowledging the protectionism is inflationary. The tariff impact, though, is medium to long term, and that is really interesting, isn't it? Because not only do we have to be asking questions about the scope of these tariffs, but also the timing.
What does medium term mean? I don't know these days. Is that 6 months? Is that 9 months? Is that 12 months? It's going to be interesting to see how quickly this all happens. The line that really stood out to me was we could be leaving restricted territory in spring 2025.
Yeah.
So you could be down to the level at which we could be hitting neutral by spring. Do they need to get accommodative beyond that is the question I think the market is now trying to figure out. And how much further could they go? Or do they just stop when they get to neutral, given some of the uncertainties, the inflationary uncertainties that exist out there?
I wonder how much of that changes, though. I mean, and I wonder how much of that is dependent on the Trump tariff risk.
Precisely,
or the China tariff risk as well.
Whether we'll know enough by then.
Yeah.
Because if it's not till medium term,
that's
I don't think that's spring, but...
Can I just flag the European tariff response as well? Could be quite significant.
Yes,
Europe is going to be responding.
Will respond, and it won't be caught off guard like last time. And we've already seen Levi's and Harley-Davidson mentioned plenty of times.
And I believe isn't spirits and liquor are also the ongoing talk, not to mention other fine goods. We're also going to go from the macro to the micro. We're going to talk about one of the major stock movers, and of course, his buyer. It was halted on volatility. Looks like it's resumed. It's selling down about 12%. More on that and more next. This is Bloomberg. This is the opening trade. We're about 30 minutes into today's session. Red on the screen across the European equity indexes. You are seeing the selling continue. A lot of it concentrated in the French and German indexes, now crossing that 1% level. It looks like the FTSE 100 is catching up as well, down about 0.6%. But still, the underperformance not as dire as in other parts of Europe. Let's go to one of the major movers this morning, and that, of course, is German chip maker Infineon, forecasting a decline in their 2025 fiscal year revenue this morning. Those shares higher by about 0.5%. Our very own Oliver Crook spoke to the company's CFO earlier about the wider German economy and what U.S. tariffs could mean for the future. Take a listen.
What we would expect is very clearly that, first of all, the government is back in full force so that they can address the geopolitical, the economic challenges which we are all facing. We want to have certainty on the regulatory framework. I would recommend to focus on the energy topics. I would recommend to focus on international trade elements, also with new governments somewhere else in the world. And lastly, but that's more a general comment, also on the defense side, I think here the new government needs to take a very clear position in order to safeguard the situation here for all of us, not only economically.
Yeah, and there's also been a consequential election in the United States with the election of Donald Trump, who has sort of advocated much more protectionist policies, a lot greater trade barriers that will have an impact if he executes on that, more perhaps than anybody else within Europe on Germany. How are you seeing that play out, and how is Infineon preparing for that?
Yeah, so first of all, that would not be very new. We have seen that in the past. Yes, we are a clear advocate for level playing fields, so that is not positive for the industry. On the other hand, we just have to face the realities. It's a geopolitically new situation. It means that we have to increase resilience. We have to provide backups. We have to selectively localize. And with our footprint, where we have huge fabs in Europe, in Asia and in the US, we feel well positioned, and for the rest, we just need to see what the concrete measures will be, and then we will act accordingly.
That was the Infineon CFO, Sven Schneider, there, speaking to our colleague Oliver Crook. For more on the company's earnings and the wider German economy, let's bring Oliver into the conversation. Olli Crook in Berlin. Olli, run us through then the Infineon earnings, what they tell us about the German economy, because you don't get very far through the statement before you start joining dots with the auto sector.
Yeah, exactly. And I mean, they're one of the great suppliers to the auto sector and for the chip industry. So I think just overall with the cyclical downturn we're seeing in the auto industry. But what I found interesting is in this conversation, it was not just about the auto industry. There is a bright spot, he said, is that in the kind of actually EVs sold in China, they're still selling a lot of EVs, and they're sort of really very well entrenched in the supply chain there. So that was sort of a bright spot. But overall, the sort of auto industry is down. But what was interesting was it was not just the auto industry. He's saying that across the board, many of their major clients are just basically dialing back not just the volume of their orders, but how long they're sort of fulfilling their inventory for. They're going for much shorter periods of time because of that much more restricted sort of foreseeability sort of on the I should say on the forecast of what's going forward. And so that means for them, they're going to do much lower volumes. Even if net they're bigger in the year, they're going to be doing them much more incrementally because of that, that concern. And of course, that means for them, they're going to have to dial back costs. There's the uncertainty around the trade war. These are all sort of headwinds potentially for Infineon and these German companies. One thing I did find interesting is we saw such a radical move on the euro since the election of Donald Trump. I asked him how much of a sort of protagonist FX is going to be for the earnings going forward. What was interesting is they're forecasting the euro dollar at sort of 110. We're at 106 right now, and actually every cent lower that it is an upward sort of boost to their revenue by about 100 million. So that spread right now is they're going to get a 400 million euro boost to their earnings because the euro is weaker right now.
It's fascinating that so much of that is coming on the back of that U.S. election. When they have an election potentially in their own backyard, Olli, walk us through the timeline for the German election.
Yeah, so listen, there's still this sort of tug of war between Olaf Scholz and the sort of main opposition candidate, Friedrich Merz from the CDU, trying to get that timeline sort of hammered out. We've got the president, Steinmeier, who sort of plays a ceremonial role, who's just trying to sort of moderate and mediate the next couple of days. One of the key issues, and we talked about it yesterday, is there's concern about basically the country being prepared for this election, having the volume of paper and ballots. So there's going to be a committee meeting today to figure out how prepared Germany is to actually hold this election. That is going to be absolutely key. But really the main event tomorrow, guys, is going to be in German Parliament when Olaf Scholz goes there to really address the government crisis right now in Germany. He's going to speak for 30 minutes, and that is then going to be followed by a 2-hour debate, a very heated debate across the Bundestag tomorrow to sort of see where they can sort of make progress, and that will begin to give us a slightly more shape to what this election will look like. We've also got the latest polling. I'll just leave on a final observation on that. We saw basically everybody sort of really holding on to their position, though we're seeing sort of the moves move away from the smaller parties towards the larger parties. This is the first poll that's been published since we actually got the election called. So there you can see it on the screen. CDU still leading, but the AfD there pushing up to 20%. That is not far from the high watermark of 22% they got earlier this year.
It's interesting in light of what we've seen in other elections recently. Olli, thank you very much indeed. Bloomberg's Olli Crook joining us out of Berlin. Let's talk a little bit about what we're seeing in some of the German companies this morning. Let's start with Bayer. Bayer shares down quite hard this morning. The German conglomerate cutting its profit outlook for the year. We've also got news out from AstraZeneca this morning, which is a firm focus of the Bloomberg intelligence team. AstraZeneca's cancer hitch eclipsing a raised view is the line from BI. Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence, joining us around the table. Let's start with Astra. Talk a little bit about what is happening here. So they've raised the outlook. They're investing in the United States, but we've got a little bit of a hitch when it comes to this lung cancer drug.
Yes, Guy. So this is a lung cancer drug that's been, dare I call it, a saga for a while now. It's a complicated drug. It's a very innovative drug. It follows on the footsteps of a very strong product they have called Enhertu, and it tries to, in this particular case, is going after lung cancer. It's just had a bit of a mixed story. The trial didn't work out for the whole group. Then they thought we can file for a smaller group. And in the end, they've now decided not even to file for that. They've pulled their filing. That's a big decision by a pharma company. I don't think this was supremely unexpected, sort of in a right, because it really was quite messy as we went along, and I think quite a few people expected it not to really make it in the end. I mean, even if it did, not to have big sales, still, the company did choose to file, and now they've pulled it back, which is not something you see very often with pharma companies.
And now we see that AstraZeneca, so you were right to flag this, though, weren't you, as a team, because AstraZeneca, one of the biggest weights to the downside on the FTSE 100, only down by 0.75%, but that's not what you'd expect, maybe, from a beat and raise.
Right. No, so we have a conversation within the team. I did wonder whether, having started green, it will actually go the red again. The thing is, the underlying business is doing really well. Pharma companies have hiccups along the way all the time. It's part and parcel of developing drugs. It's a risky business. So it's just not nice to see. Otherwise, you look at the numbers, they're looking very, very strong. They have a very strong pipeline. So underlying fundamental story, which of course is also overshadowed by another issue, which I'm sure you'll come to, is solid.
I mean, so many things to talk about when it comes to AstraZeneca. What's more interesting to focus on, do you think, here, Sam? Is it around the competition on obesity and where they're getting into obesity, pills rather than injections, and it's not all about GLP-1s and the like? Is that where we should focus? Or they threw in this big US investment as well today. What caught your eye?
Yeah, what caught my eye was 5 press releases at the same time, which was a little bit of a surprise from a pharma company. Maybe it was just a coincidence that all these things came at the same time. The fact, what caught my eye is the reminder again that this is a fundamentally strong business. It's been built over the past 10, 12 years. I can't remember how long Pascal Soriot and the team have been together on this, to produce a solidly growing, particularly cancer, but also in other areas, business. So along the way, they're having these hiccups. And this particular recent hiccup, which was a China issue, is not it's not to be sneezed at. It's a meaningful problem, but it's not an AstraZeneca problem yet, as they've highlighted. It's individuals that have been targeted so far in China, not the company. So again, I want to go back to this. Fundamentally, they've done an amazing job of getting the pipeline and the products moving forward. Along the way, you get hiccups.
OK, so that was the probe then, Chrissy, into certain Chinese employees, current and former, and what they knew about when a certain drug made it into Hong Kong and then across into the rest of mainland China. When I spoke to Pascal Soriot not long ago for the Leader series, he was talking about how they weren't having their heads turned by all the frenzy around obesity drugs. Yes, they're in that field, but they're not... You know, you didn't get the sense of huge urgency in that space.
I wonder if there's more urgency perhaps around the regulation front as well in terms of pivoting. And Sam, that's where I want to go next, especially not just light of AstraZeneca, but Novo Nordisk as well. Both of them down this morning. Novo has 60% revenue to the United States. How much does regulation matter in the U.S. in this new administration for some of these companies?
Yeah, so there's if I just want to boil it down to 2 tug of war. There's one tug of war, which is if potentially RFK Jr. does get a meaningful role within the administration, I think he's been vocal about that. He cares about major long-standing diseases such as obesity, etc. but maybe not that much of a fan of obesity drugs. So you got that on one side. On the other hand, you've got the possibility that the regulatory process for getting products approved might become a little easier, a little bit more smooth, because this is a government potentially that's going to be more interested in less regulation.
Even for vaccines?
Vaccines is a different game because they're all approved. So that goes back to the original question of whether Robert Kennedy gets in a position to have influence on that.
Yeah.
A vaccine is already under pressure anyway, as you've seen. So, but that's the tug of war that they have. And on obesity for AstraZeneca, remember, this company has been in cardiovascular diseases, is in diabetes, has been in diabetes with GLP-1s before. This is not a new area for them. So, we saw the data, and they're a player potentially.
Let's talk about another major mover this morning. That's Bayer, taking quite the beating, down over 12% the last time I checked. It looks like it's a weak earnings guidance. They're talking about a weak crop unit. What do you make of Bayer?
Yeah, so our team who cover agriculture, we're already flagging that 2024 is a tough year for farmers, basically because revenue is down and crop prices are down. So it's not a massive surprise that they're seeing this kind of pressure. What perhaps is a little bit of a surprise is that they're also guiding to a pretty much flat 2025 versus consensus of a 4% or so growth. This last time I checked. So that is where the issue is, crop science. I'm pretty sure the company wishes it never did that deal.
Yeah, no kidding. Yeah. It certainly changed its trajectory. Can I ask you a slightly sort of broader, bigger picture question? Is the pharma sector seen as a winner or a loser? It kind of comes back to your question about kind of regulation versus kind of what happens more broadly in terms of acceptance of certain key drugs. Can I fold in the dollar as well in terms of kind of the dollar earnings story too? Is the pharma sector a place to hide from Trump? Is it a place to take advantage of the Trump trade? Where does it sit in the kind of pantheon of relative trades you can put on with Trump in the White House?
So, Guy, if share price moves since the election don't tell you that story. Share price moves since the election suggest that maybe pharma is not that important in this great scheme of things.
Okay.
Situation. So what I think might be going on, however, is that people are putting their bets elsewhere. I mean, you've seen the share price of Tesla, right?
Yep.
You've seen the share price of a whole host of other U.S. companies that are more in the feeding potentially into the world of inflation and growth. So pharma is more of a defensive play, and I don't know whether that's necessarily something that's going to benefit under this.
But it's interesting. Over the last few days, defensive stocks have been out. Defensive stocks have done relatively well, but pharma hasn't. So
but pharma is a global business, right? So, and if you have situations where there is pressure on perhaps some drug uses, as we talked about, and attitudes to medicine in general, science in general, pharma is a science business, right? And it goes back to the conversation we just had about vaccines, obesity drugs, which are a great help in this fight against the underlying causes of disease, obesity, diabetes, etc. So I think if you view the administration as an anti-science administration, which to a degree you felt it during the previous run, that it's not great for pharma.
Sam, thanks very much indeed. We'll leave it on that note. Sam Pazzelli from Bloomberg Intelligence. What have we got coming up for you? Talking of science, climate negotiations are continuing. Are we looking for a breakthrough on day one at COP29? The summit is taking place in Baku. We'll be live there in just a moment with details. This is Bloomberg.
Welcome back to the opening trade, 8:47 here in London, and we have European equity markets very much on the back foot. The Stoxx 600 down by more than 1% right now. Let's turn our attention to the energy sector. ExxonMobil CEO Darren Woods believes market fundamentals are relatively stable for the oil industry. He met up with Bloomberg's Jemana Besetcha at COP29 and the summit taking place in Baku, where she asked him about the potential impact of a Trump presidency on climate initiatives.
We don't set our business plans based on the political agendas or who's in the White House or what party's in control. We look at the fundamentals and making sure that the investments that we're making are advantage versus the rest of industry, will be resilient in the bottom of the cycle, and then we make these plans and commit to that. And so I think we don't kind of turn those on and off depending on who's in office.
But your shale production has been growing quite strongly in the last quarter. Can that momentum continue?
Yeah, that's our plans are continue to do that. We expect to, by 2027, be at 2 million barrels per day.
You've invested in some businesses that benefit from the Inflation Reduction Act. Do you have any concerns there that President Trump may look to repeal some of those policies?
So we've been very focused on figuring out how we can bring our capabilities and skills to reduce emissions, recognizing that today there aren't very many market forces in place that will incentivize investments to reduce emissions. And so the IRA was I think a legislation that was focused on carbon intensity, the right way to drive emissions reductions. And so we responded to that to demonstrate there are ways to continue to provide affordable energy and reduce emissions. We have, I think, very competitive projects there, and it's going to be a question of how quickly do we want to advance those. Obviously, we need the regulations to come out of the administration. Even the Biden administration today hasn't fully translated the IRA into effective regulation. So that has to be done even before the Biden administration leaves office. We don't have Class 6 permitting done, which allows us to store the CO2. And so this administration has things to do to advance that, and then we'll worry about the next one when the Trump administration's in.
When we start in January. How do you see the outlook from here? It feels like, barring any of the geopolitical risk, it's been really difficult for us to see a sustained rally in the oil complex here.
Yeah, you know, it's interesting. Demand is at record highs, both for oil and for gasoline and diesel. And so the demand is out there today. The industry's been very effective at supplying that demand. I think that's what you're seeing. And fortunately for us, with some of the turmoil in the Middle East, that available supply has kept the markets fairly stable. And so it's less of a demand issue, and there's just a lot of supply.
And how much of a headwind do you think these China demand signals are posing? Yesterday, one of the catalysts for the market dropping was the fact that fiscal stimulus disappointed what investors wanted to see.
I mean, our industry, we're always stuck between where the supply is at and where the demand is. That tends to vary. We don't get too focused on what's kind of happening outside the window in today's market. We're very focused on the long term and making sure the investments that we make are resilient to that long term and that we're very efficient. We've cut out over $11 billion of cost since 2019 to make sure that we are cost efficient and our projects are advantaged versus the rest of NDC. We feel pretty comfortable, irrespective of the price environment. We've got good investments and we'll generate good returns.
Darren Woods, the CEO of ExxonMobil, speaking to Jumana Besetcha from Bloomberg, of course, at the COP29 summit. I mean, a couple of really interesting lines here. Speaking quite favourably about the IRA and the way that they've got on board with that carbon intensity is the right way to sort of pivot the industry, and downplaying the role that the White House plays in the energy markets, which I think is really fascinating, given where we are right now.
It was really interesting listening to some of the conversations during the show that we've had, talking about the fact that you are going to see some inflationary factors being put in by the Trump administration. Maybe they offset that with disinflationary factors. One of the areas you could do that with would be within energy. And that comes back to the idea that the Trump administration wants to see the US having significant energy strength. Now, does energy strength imply higher prices, or does it actually imply lower prices? Presumably it's the latter. You want lower energy prices. You want to be able to drill, put more products into the market, and keep that as a powering force for the US
That's
economy.
what Eric Knutzen was sort of suggesting, wasn't he?
It's all a lovely thought, except, and this is something that Alex Steele had educated me on years ago, our energy colleague, who, of course, specializes in that, and talked about the idea that the U.S. can produce as much oil as they want, but it's still light crude. It's not heavy crude, which is what they still need from the Middle East. So you can have this narrative of kind of being self-sufficient, for example, but you still need to find other sources to kind of create that trade. And right now, the other sources, the only one that really exists in terms of growth market for the United States is right here in Europe.
There's a lot we don't know still about how this Trump administration will perform when it comes to the energy space, I suppose. So we'll have to wait and see. Maybe, Critty, we go on to the next part of the programme, sticking with the energy theme, in fact.
Yeah, absolutely. The climate negotiations are another piece of this. Darren Woods kind of briefly touched on it. And those COP29 underway in Baku for climate financing and security has led discussions thus far. Let's listen in on what the European Investment Bank President Nadia Calvino had to say to our very own Jumana Besetcha on the need to diversify from fossil fuels. Take a listen.
It's not only a matter of climate change, it's also a matter of security. The war in Ukraine has shown that Europe needs to become more independent. We cannot continue to rely on fossil fuel producers. So it's a no-brainer. You know, we have to get on with it.
Our very own Jumana Bersetchi talking to Nadia Calvino about COP29. Get on with it. That seems to be the theme around the world in various sectors. Jumana joins us now. Jumana, walk us through how large the shadow of President-elect Trump looms over some of those conversations.
Well, it's funny you asked that, Kruti, because today is actually the Leaders' Summit Day, and many leaders, as we spoke about, have actually chosen not to attend. European leaders obviously dealing with some domestic issues. The Italian Prime Minister, Giorgia Meloni, is here. Sir Keir Starmer is here, but notable absences, and even from U.S. President Biden himself. And of course, we know the U.S. have gained a lot of credibility in the last couple of years on the topic of climate with the passage of the Inflation Reduction Act. But of course, as well, that is all going to change with the return of President Trump to the White House come January. So even though he's not physically here, and I'm talking about President-elect Trump, his shadow looms large. Lots of the discussions that are taking place directly at COP and even on the sidelines of COP are centered around how climate policy could change under President Trump, who has criticized the Biden administration's climate policies. He's talked about repealing some of the subsidies and tax cuts that were put in place by the Inflation Reduction Act. Interesting to hear Darren Woods actually talk about the Inflation Reduction Act and us not placing too much emphasis on one or another administration when it comes to the passage of certain legislation. I thought that was an interesting point. But then also the big question mark here is what could happen should the U.S. decide to withdraw from the Paris Accord framework. And that would be a severe blow to the discussions that are taking place here. And if you think about the deliverables of this specific COP, we spoke about financing, about the need for trillions of dollars of investments channeled from rich countries to developing countries into renewable energy, into energy efficiency. And at the same time, this is an opportunity for countries' delegations to think about their own plans, these national defined contributions, the NDCs, that are due to be presented in Brazil next year, on how they will look to further decarbonize their economies. With the absence of leadership from the United States, does that open up the opportunity for other countries around the world to start slipping on those emissions targets? These are big questions.
They are big questions. We'll look for some answers. Jumana, thank you very much indeed. Jumana Bersetchi joining us from Baku at the COP29 summit. Let's talk about what we're watching in terms of the stock moves we were seeing this morning. Buyers certainly on the move. Pharma stocks generally on the move. We're watching the luxury space as well. LVMH is down pretty hard, but Bayer is the real story this morning.
Yeah, Bayer certainly is. We were hearing from Sam some of his takeaway and maybe some regrets from the business around M&A of the past. But this has been a really long-running saga, hasn't it? The luxury sector was in focus yesterday, I know, for you guys, and remains so as well. The Burberry share price, perhaps we'll get that one up on the screen. We can see where that one is. But there have been lots of talk about whether this was going to be bought, and I think latest twist and turn is that maybe not.
Yeah, it feels like a lot is in the red this morning. Risk sentiment down across the board from the micro to the macro. Of course, you're seeing that even in the banking stocks as well. We'll see how much of that is related to rates. We're also speaking of banking stocks as well. Coming up later today, John Messer interview with Citi CEO Jane Fraser. That coming up at 7 p.m. UK time. We'll talk about capital rules. We'll talk about interest rates. All of that on the agenda. That does it for the opening trade. The Pulse is up next. This is Bloomberg.